All right, guys. So this is day 12. Stanley, can you see my screen and hear my voice?
I can hear your voice, but I can't see your screen.
Okay.
Okay, I can see your screen now. It's up now.
All right.
Yeah.
Okay. Okay. So today we're going to be talking about price swings, how price swing forms. Okay, and the types of liquidity. Okay, and would also we'll do price swings, then rules for it through BMS, then types of liquidity. All right. So once we are done with that, I believe that we'll be able to start trading from next week, applying all the principles that we've learned so far. You said? Okay, I guess she's talking to somebody else. All right. Um, all right. So moving quick. So price swings. What are price swings? What are price swings? Okay. So price swings. I've explained price swings before, right? Let me just bring up a note. I'll just bring up a note here. Say docs. You. Where is it? This will be the 12 notes.
Bro, is it possible if you make all these notes available sometime?
Yeah, I have all of them, man. I just don't feel like it's necessary to post them, but I would, I guess I'll keep posting them. I'll post all the ones that are available.
Like maybe after everything, you can just compile everything into one.
Okay, okay, that's better, I think. Yeah, I'll
Yeah,
put them inside one folder and then drop it at the
one.
end.
Yeah.
All right. So
Thank you.
yeah, no other price swings. Price swings. Price swings are places where a new range starts, or places where a retracement starts. Okay? So at price swings, either we continue the trend or we retrace from whatever trend we are currently in. So that's basically what price swings are. So um, we've spoken about it before when we talked about liquidity pools, right? So price swings mm, are basically uh, where did I put it? Swing highs and swing lows. Okay, so those are price swings. Those are price swings. So we'll go back as a refresher to what price swings are. Okay, so um, the price swing is here. This is a price swing, right? So where a new range starts. Okay, so this right here is also a price swing as well. Then um, all these are price swings. Okay, all those are price swings. These little ones are also price swings as well, but that would be on a lower time frame. All these ones are also price swings as well. All right, but they are price swings on a lower time frame, so up and down. All right, all those are price swings, but they'll be more easily seen on a lower time frame. But on this time frame viewing now that we're viewing, the most obvious price swings are the ones I'm marking right now. So these, okay, so this, okay, so this. Okay, so these are price swings, right? So today what I want to basically talk about is how these price swings form. All right. So now the reason why mm, the the reason why we need to know how price price swings form is because they are major turning points in the trend, right? In the trend. Okay, so um, if we are in an uptrend and we take out a swing low, that is the reversal sign, and vice versa for the downtrend. Okay, so vice versa for the downtrend, right? Okay, so that means that looking at this downtrend now, for example, if we go ahead to take out any of these swing highs that we see or that we identify as major points, major turning points in the trend, okay, that will be seen as a change of trend. Okay, so now price has currently formed a new swing high. So you can see here that there is a major move on price. Once price is there, we start to form a new range aggressively. So should price ever come up to take this out, that would be a change or a reversal in the trend. Okay, so and we would keep going up like that. So this is why we need to know how price swing forms. Okay, so basically price swings form in two ways. Either it forms as a stop run or as a failure swing. So what we'll do now is that we'll go into what stop runs and what failure swings are. All right, so going back to my previous points about them being a sign of change in trend. So just looking at it graphically or diagrammatically, if we have an uptrend like this, okay, so all those lows that is forming are swing lows, while the highs are called swing highs. So we're using the swing highs as targets for our buys, okay, while the swing lows are supports. Okay, so anytime a swing low is taken, that is a change of trend. All right, that is a change of trend. That is a break of market structure. And from then onwards, we would expect the price to either correct deeply, or depending on how the structure looks on a higher time frame, we might expect it to change trend completely. Okay, so this is basically what I mean. So if we should go ahead and take out a swing low in an uptrend, that would be a sign of change in trend. If you take out a swing low in a downtrend, sorry, swing high in a downtrend, that is also a sign of reversal to the upside. All right, so this is why knowledge of swing lows and swing highs or price swings in general is important. Okay, so yeah, that's basically what I should go back to that and reiterate my point. Okay, so now um, stop runs, stop runs. Okay, so stop runs. Let me not. I think I should explain this graphically. I won't really like to just draw it on the charts. So I'm just gonna say stop runs. Okay, so Assuming we have we have an uptrend, all right, we have an uptrend, and then it's currently coming down, okay, and let us assume that we have our point of interest, so the place we want to buy from. That is, let me say this place, we can call it a support level, right? So let's say we have a support level down there. I made a mistake. So let's say we have a support level down here. Okay, so support level is down there inside center board. Okay, so let's say we have our support level down here. All right, so and we find price doing something like this. Okay, so it's doing something like this. So it looks as if, so now let's assume that this is happening when we are very, very sure that this is the support level that price has to come down to before it continues going up, right? So let me say this is where the imbalance closes. It could be an imbalance field, it could be an order block, sponsor candle, whatever. This is just a support level, okay? Just regular support and resistance ideas, okay? So the price might do something like this, okay? Maybe act as if it is starting to go up to trick people to believe that this uptrend has started already. Then people will start buying. Okay, so this is engineering liquidity. Okay, so people will start buying already, thinking that the price will run up from here. Okay, and then what we could have is that instead of flying up after creating some structure like this, it might run down. Okay, it might run down. Okay, so it might run down. So what happened here is a stop run. All right, what happened here is a stop run. What happened here is a stop run. Okay, so here if stop run, stop run. Okay, um so basically what we're studying is this price swing down here, right? So a stop run happens there. Then what is now rushes down to hit our support level. It rushes down to hit support level. And then what happens next is that we move up and create uh, a bullish breakup structure right here. Okay, so markets are successfully reversed. Okay, so we trick people into buying prematurely. Okay, so they must have bought in all these places and then their stop loss is down here. Okay, their stop loss are under these lows and the price would run it and make a run higher. Okay, so it's run it, hit the main key support level, and they run higher, create a break in market structure. Okay, so if something like this happens, all right, something like this happens, okay, this sort of formation is called a stop run type of thing. Okay, this is a stop run type of swing. Okay, so this type of swing is called a stop run. This type of swing low, this is a swing low to be particular. Okay, it can happen in a downtrend, and then we'll call this a swing high. All right. So this is a swing low in this case, and what happened here is a stop run. All right. So in this case now, we would not expect. Um, what we expect now is that price wouldn't really come down to here. All right. Price might not really come down to here. Okay. So price won't really come down to here. Price would usually just, so this is like a breaker block situation. Okay. It will literally come down into this area and then run up and continue the trend to take out the next liquidity and continue the uptrend. Okay, so now the area we're expected to react from is this area here. All right, so something in this area is where we're going to react from. It can be a breaker block, it can be a normal order block or a normal sponsor candle, it can be an imbalance, it can be anything. Okay, but this is the general area where we expect a reaction to happen. Okay, this is the normal area where we expect a reaction to happen from. Okay, so that is basically it for a stop run. So stop runs look like this. Stop runs basically look like this. Um, from from we run the stops, we run higher, okay, and then we continue like that. So a stop run happened here, okay. So this is a stop run. It runs stops here, and then continues higher. Okay, in a downtrend, a stop run might look like this. Um, might look like this. Okay, might look like this. And then it aggressively comes lower and continues lower. All right, so this will be the area that it's reacted for. All right, so this is how a stop run looks like, and this is so in this type of scenario, the way you'll be looking to trade here is that um you must have observed your key level down here. You must have observed your key level down here. Okay, you must have observed your key level down here. So once price starts um doing something like this, either creating a weak upward move, okay, when you are sure that it does not hit your final target for the downward move, okay, you are sure that it does not hit there, and then it starts creating this type of thing that kind of looks hopeful. All right, so you can either the number one plan can be that you either buy here, okay, you can either buy there, all right, with your stop loss here, okay, you can either buy here. So this is the best type of scenario. Okay, this is the best type of scenario because you can have two opportunities to trade this. Okay, so you can either buy down here, but you have to be bold to do this. You have to be bold and you don't have to be experienced, but you have to be bold to do this. You just have to know that okay, we have not reached the support level and we are doing some tricky stuff here. All right, so as long as price has not um price has not done any move to break market structure to the upside, all right, you know fully well that this is a trick and this can go the other way. Let me show you. Let me see. I think something like this happened in the crypto market recently. I think something like this happened in the crypto markets. I think something happened in the crypto market. Okay. Yeah. Okay. Okay. I won't say it's the exact same scenario, Sha. I won't say it's exact, but it is quite similar. Okay. It is quite similar. This type of thing here is just you can see how weak it is. People might think that okay, people might think that okay, we are starting to accumulate and price will soon continue this uptrend. Okay, but alas, we've not gotten to our downward level. We're still in a bearish move on a higher time frame. So all these things, if you are if you know what you're doing, you know that this is the key level that price needs to go above. If you zoom in here, you see that there is this key level up here. Okay, so until price goes above this, there's nothing really optimistic about BTC. Okay, so until price goes above there, then there's no BMS. So I will not be willing to buy this, especially looking at how fast this downtrend was. Okay, so this is not exactly what I'm talking about in the swing, or what do I call it, in the stop runs. Okay, it's not exactly the same thing, but this is a very very similar scenario. A stop run now will be like there might be a support level somewhere down here that price has not hit. Okay, so it might not hit here and then run higher. Okay, then to now use this area as a support something there. It might be inside here or inside here that to find a support level to keep going up. So to never ever give anybody the chance to buy low or get out of a losing trade like that. Okay. So um that is how stop runs work. So this thing is just giving people false hope. False hope. Okay, so if you don't know what you're doing, you might start buying this thing. You might start buying this thing without it giving you any true sign of a continuation of the uptrend. Okay. So buying these assets, buying this stop run. So buying this stop run down here takes quite some bravery. Okay, it takes quite some bravery, but this is the best entry you can ever get for this type of setup. Okay, so you can buy here. Your stop loss will be very small in this case. Just put it a little bit under this low. Okay, just under it a little bit, or you can just jam it depending on how you feel. Okay, so just a very small stop loss. All right, so the second scenario, if you don't have enough faith, if you don't have enough boldness to buy here, and you always want to wait for BMS, this is the safest approach. Okay, even though you will not make insane money by doing this. So this is the best place to buy. But another opportunity that price will give you to buy is um if it goes above here now, then you are sure that, oh, this is a stop run type of scenario. I'm sure that this is a stop run type of scenario. So you can now buy. So once the price is around here, you can start monitoring it and set your buy to be somewhere around this area. Okay. So you might look for your point of interest inside here because you know that this is the area that we will surely use to continue the trend. Okay. So you set your entry will be somewhere here or inside this rectangle, depending on your analysis. Okay, while your stop loss will be just below that. Okay, so the stop loss won't be here anymore to be up here because this has already fulfilled the requirement for a stop run type of scenario. Okay, so this is basically how stop runs work. This is how stop runs work, and this is how you can identify it. This is how you can play in a market such as this. All right, so you see the trend coming down and you have a key support level down here. You have a key support level down here. Okay, so as long as price has not gotten there or price has not shown any sign of changing the trend up here, all right, you know that this is probably a manipulation. This is probably liquidity being engineered. Okay, this is probably a trick to trick people into buying this thing prematurely. All right, so you will not fall for it, and you only wait for when it comes down here to get in on the trade. All right, so you can either get in here or get in here. So this is a stop run scenario, and this is how um you basically take advantage of it. That's the ways you take advantage of it. All right, so I think I'll just, since I started giving you guys notes, or I'll give you guys the notes later. Let me just copy this and paste it in my document here. So I don't need to start explaining the stop run here as a text. Okay, so you just have a picture down there. All right, so next is failure swings. If you have any question concerning the stop runs, please ask before we start this one.
Um, CGI,
Yeah.
can we say the stop run is similar to retracement?
Yes, but the difference is it can be a rotation, but can be something different. All right. So this thing, it doesn't matter. Okay, um it might not even be an uptrend that's continuing. It might just be a downtrend. It might just be a downtrend. It might just be a downtrend like this. All right. Okay, but the downtrend is approaching a key support level. Okay, the downtrend is approaching a key support level. So the downtrend might start showing. So you as an experienced trader, or you that some as somebody that knows his shit, you may have analyzed and seen that this is most definitely the place that is going to get a reaction from price to the upside. So you're anticipating a reversal or a change of trend. Okay, so and you see something like this, or it might just be a consolidation in general, it can be anything. All right, so you would wait for the price to get down to the support level. Okay, so this support level can be anything. It doesn't have to be a continuation of the trend. Doesn't have to be this doesn't have to be a retracement. Okay, it can just be a total change of trend. All right, so this might just be the place where a retracement starts. So this might be a downtrend and a retracement to start here, or it might just be a total change of trend. It can be anything. All right, but we're just saying how does this type of low form? How does this type of opportunity form? Okay, so it might be a retracement you are trading, it might be an impulse move, it can be anything. Okay, so we're just breaking down how this type of setup will form. All right, so to form like that and keep going higher. So that's how a um, stop run works. It doesn't have to be a retracement. That's just basically the thing. This thing can, I said support level. I didn't say other block or anything. It can be anything. It can be another block. It can be an imbalance. It can be anything that is acting as support for price. Okay, so not necessarily a retracement per se. Cool. Are you good?
Okay.
Okay.
Hello.
Yeah.
For me, my question would be how would you know when the manipulation is almost over? That area before it gets to the major support level. That area where there is the manipulation.
This place.
That's those fake uptrend here.
All right.
How would you know? Would there be a sponsored candle
Yeah, there might be
there to
something.
show you that?
There might be something in there. Yes, there might be something. There will definitely be something there that would precede the run to this place. But whatever happens here is not really your business. So there will definitely be
Okay.
something here that will make you know that okay, we might be going down now. But as I said, this place might not necessarily be a small uptrend. It might just be a consolidation, and in the consolidation, you don't really have anything to trade there. Okay, it's just bouncing back and forth
Yeah, yeah.
randomly. So what happens here is not really your concern, and you never know when it will break down. Like that BTC example I gave you. Okay, that BTC example that I just showed some time ago, BTC
Yes.
USD, you can see that the thing dragged for a long time. Okay, so this happened for a long time. So nobody knows when it will end. All right, so you can't say for sure in this type of move that okay, it's ending here. Boom, let me start preparing. Okay, so your own is just to wait. Your own is just to be patient as a trader and just wait for that setup to form. Okay, so there's no guarantee about when to stop or knowing what will happen inside here. Okay, your own setup is just to find when it breaks down. Okay, and pick your trade here or pick your trade here. Okay, so this area is not your business. This is not your trade. Your trade is down here or up here. Grab.
Yeah, yeah, yeah.
So consolidation can last for as long as possible. It doesn't matter. Okay, so that's just the point. You never know how long or when that consolidation will end, but the main thing is that we just want to see price um, trick people, okay, just to form a trick here and run to our entry before we buy. So yeah, that's just basically it. That's all for stop runs, okay. So we'll move on to failure swings. Failure, failure. I don't know. The girl that asked me a question, she didn't let us answer whether she understood or not. I don't know. Did she leave the meeting?
Understood.
Okay. All right. So failure swings, right? So the two ways that your setup can form. So basically this thing that I'm explaining to you guys now, these price swings, okay, these are the two ways that your setups can form. All right, so either you're buying or you're selling, anything you're doing, these are the only two ways that the opportunity is going to come to you. All right, so either it happens as this, a stop run, or it happens as a failure swing. All right, so it will happen as one of these two. So a failure swing will look something like this. So if we have our support level here, right? So we have our support level, support level. Okay. So as usual, this can be anything. It might be an uptrend, it might be a downtrend, but we're expecting a buy somewhere around here. Okay, we're expecting a buy somewhere around here. Okay, so basically, let's just say the trend starts coming down. Okay, the trend starts coming down. The trend starts coming down. Trend starts coming down. All right. So for a failure swing now, you won't really have that manipulation, and there's no way you can actually tell whether a failure swing is going to happen because sometimes you might think that your support level is what is going to react, but um, it won't actually get to your support level. So let me assume that in the case of a failure swing, so we are expecting price to get to our support, but this time around it doesn't get to the support. Okay, it doesn't get there. It's just short of it, and we are expecting here. We're expecting price to reach here. Okay, and then price makes a higher high. So let's say this place is a major high. So we are now sure that the trend has changed. Okay, so what this kind of thing can happen, even if you are sure of the support level, like in this case, but it might not form what you are expecting. Okay, so it might just leave you and move higher. Okay, so it might not touch it and you start moving higher and you be like, oh my god, I've lost it all. Okay, so basically how we play this one now is that we wait. Okay, so we wait to see if uh price will carry on. Okay, so price would later, if you have a failure swing, this is now the area where price will react next. Okay, so to react there, so you're expecting price to come down in there, and you can now buy in this area. Okay, you can now buy in this area, even if in fact I will not advise you to buy in this area. Why? Because there's no sign that the trend is solid. It could just be an inducement. Okay, so you won't buy yet. Pardon me. Okay, you won't buy yet. So this could just be an inducement. This could just be an inducement. Okay, and the price will now continue lower. All right, so you won't buy here. The price will come down, most likely use this place to continue higher, or it might even come down, anything. Okay, but most likely to use here. All right, so the way we play this is that once it breaks and makes another higher high, okay, so you missed your the price didn't get your support level, okay, but now it is creating another higher high after making one already. So now we are sure that this is a new value trend and your support level did not work out. Okay, so this is what we regard as a BMS, a break of market structure, right there. Okay, that's the proper break of market structure in this case. Okay, so the place you will now buy is when price comes down. And make this a little bit cleaner. Make it a little bit cleaner. Make it a little bit cleaner. Alright, a bit cleaner. Okay. Yep. Alright. So it might now look like this. Alright. So once that BMS happens, okay. So the new area of interest will now be this area in here. Okay. This will now be our new area of interest. So this low might touch here or not. I don't know. It might touch here. Most likely to touch here, but I'm just shifting it higher so that you can see clearly the new area of interest. Okay, so this will be our new um, point of interest. Okay, point of interest. Right, so that will be our new point of interest. So once price should come back in, once price should come back in, that will be, it might react on an order block or so imbalance in here, something sharp to react there. It can react on a reclaim block up here. Okay, but once we enter this place, you look for where the right opportunity is for this particular type of trade, right? So once you hit that, you buy, you find your buy opportunity, and that's how you take this type of setup. All right. So in this case, right now, this would be your buy. All right. So and this would be your SL. Okay. So in the first case, which is stop runs, you have a manipulation and price eventually gets to your support level. Okay. In the second case, you have something that looks like a manipulation. Price continues, but it doesn't get to where you expect. Okay, it doesn't get to where you expect, and you're expecting that this this upward move now is also a manipulation. You are still expecting that this is a manipulation, but alas, it wasn't. Okay, so it creates a lower low, sorry, lower high, and then another higher high. So that second drive up is your sign to know that the trend has actually started without you, and you need to get on board in this new area that we formed here. So that is how um, a failure swing works. So in the first case, we have a manipulation. Okay, so in that case, we have two opportunities to buy, but in this case, we usually have just this one opportunity to buy. If you don't get in here, you would have to be getting in at a much higher place, except if the trend will last for a long time, which might not be that profitable as in the first case. All right, so let me just label that as a buy and your stop loss. Stop loss. So let me make this thing cleaner. Make it cleaner so that's to be look good to look at. Yes, let me delete this one. Support level. So this is the first one, and then this is our BMS here. Okay, so once we come back into that area, that will be our point of interest. Okay, and then we buy from somewhere around the top, and our stop loss will be at the bottom of it. Okay, so this will not be your buy. Your buy will be something inside here that you find. Okay, so basically, the failure swing fails to get to where you expect it to get to. It fails to get to your point of interest, but it now starts the trend without you. Okay, so this is how to um, join the trend if you get left behind. Okay, this is how to join the trend if you get left behind. So this was taken out. You still expect this to be a manipulation, but once it does the second one, then you are sure that okay, this has gone without me, and you start finding your opportunities to buy. So that is basically how this opportunity presents itself. Okay, so yeah, that is that. Yes. So any questions concerning these two? Any question concerning this failure swing? So anyway, these are the two ways that your opportunities will form typically in the market. This is just the two ways that the market is going to behave. Okay, so either it hits where you expect it and you buy there immediately, or you wait a little bit where you have an opportunity to buy again, or it fails to get to where you expect and it makes successive two new ranges without you, and that is when you know that you are behind and you need to join the trend. So That's basically how it works. All right. So um,
I have a question.
yes, please.
Basically, what you've been talking about concerning the stop run and the failure song is just to buy. Does it mean we cannot sell in any of them?
No, this is just a buy scenario. You can if it's the other way around, then it's a sell scenario. You know, the market has upward move and downward move. So, like I said here, look at the notes. I said um, the reason why we need to know price swings, know how price swings form is because they are major turning points in the trend. If we're in an uptrend and we take out a swing low, that's a reversal sign, and vice versa. Okay, so this scenario right now is when a failure swing forms in an or forms in a buy scenario, while this is a stop run in a buy scenario. So you can also have the sell scenario of it. So you can have your resistance level up here. Okay, so for your um stop run, you might have something like this. Okay, and then it still goes to your resistance level and starts falling. Okay, so uh just flip the idea in your mind. Okay, so this will now be your second area of buying, and this will be your first area to buy. So we had a stop run down here. Okay, so the price ran the stops, and you can either buy here or buy here. While if you have the failure swing, you can have your resistance level. You can have your resistance level here. Okay, but price fails to get to where you expect to sell from. Price fails to get to your sell position. So it climbs. Well, you're expecting this place as your order, but alas, it doesn't work out like that. Okay, it doesn't work out like that. It starts forming the new trend. So once it's once it's this one will still be seen as a manipulation, but once it goes again, this will now be our buy opportunity in here. Okay, so for the sell side or for the sell scenario, you just need to transpose these two ideas. You just need to transpose them to the other direction. Okay, so that's basically how it works. So you can sell, not just buy. This anything I draw here, you know that once you flip it the other way, that means that's for the other direction in the market. I'm just using just uptrends to make it very simple and short.
Yeah,
Yeah,
maybe you should make use of invert scale in this trading view so you can turn it upside down. Change it to down to.
where do I do that one?
Yeah, should be in the option. Yeah, invert scale. It's still up there.
Okay,
Invert scale.
okay, yes. So thank you. This basically is for the downtrend. Okay, so and this is it for the downtrend. So you can buy or you can sell, but um, how do I even put this? You can buy and you can sell on this, but I'm just giving you the concept on the idea about how it forms. So in an uptrend or in a downward move, in this case, you have a manipulation going on here. So you wait for your support level to come to you, or your resistance level in this case to come to you. So once it gets to your resistance, you sell. But if you don't have enough faith to sell at your resistance, you wait for it to drop below and create a break of market structure. So once it creates a break of market structure, you're expecting it to come into this area before, so you can sell. Okay, so you fail to sell here, so you can sell here as well, or you can sell here and also sell here as well. You have mine. Okay, so depending on what you want to do. All right, so I'm just showing you how you can take advantage of the opportunities in the market and how the market opportunities will come to you. So either the market will get to where you want it to get to and you sell from there, or it will not. It might not get there. Okay, so if it doesn't get there, you wait for it to break down. You broke down the first time. You are still looking at this guy as maybe a trick. So it breaks down the second time, right? So that is now where you can find an opportunity to join the move in the market. So that is just basically what I'm trying to explain here. You get it?
Yes.
Okay. Thank you, the guy that showed me this inversion.
You're welcome.
So yeah, that's just it. I won't go into the chat to find those examples for this. Time is fast spent. I just want you guys to get the idea. Okay, so you guys can go to the chat and look for it by yourself. All right. Or let me just do it. Let me just do it. Let me just do it. So let's say I have a support level. What was I looking at? I have a support level inside this rejection block. Okay, so I have a support level there. Okay, so price fails to hit it. Price fails to,
Resistance level. Yeah.
yeah, resistance level. Thank you. Price fails to get there. Okay, so I'm expecting price to get to my resistance level, but it doesn't give me that opportunity. So first time it creates a tiny move against the trend over here. Okay, so create a move here, but I am still hoping that it will still come to my resistance level, but it doesn't do that. Okay, it doesn't do that. It still makes another lower low again. Okay, makes another lower low again. Let me try and zoom in so that I can know the exact low that I'm looking at. So it makes another lower low right there. Okay, so now I know that the area that the next move is going to form. Okay, at this point when it makes another lower low, I'm now sure that all right, this trend might actually be reversing here, and I'm just sitting on the fence waiting for this POI to be taken out or to be activated. All right, so I'm just wasting my time waiting for this trade that will never ever happen. Okay, so at this point now, I will now be sure that the trade is going to form in this general area. Okay, so um I will now be sure that the trade will form in this area. All right, so this is the area that my trade, the next bearish move is going to form. Right, so I can now look within this place. I can now look within this place and say, okay, where will the move form? All right, so I might say, all right, there's an imbalance in here. I might say there's an imbalance in here. Okay, so you can see that as that imbalance got filled, price continued going south. Okay, so that closing of the imbalance will now be my entry. So I might enter when this imbalance starts, and then I'll fix my stop loss up here. Okay, don't jam your stop loss too tight. I might fix my stop loss up there, all right, to be safe. So once I enter the trade, that is my opportunity, and you can see price going south and making me happy. All right, you can see price going south from there. Right, so this is like a failure swing example because personally, I've been studying this thing, I've been backtesting this because in this place now, I was buying GBP here, right? I was buying GBP here. I expected GBP to react somewhere here, right? Somewhere here. That was my POI for BTC short. Okay, that was my POI for BTC short. Never got there, and then it broke down, right? It broke down. So that means it broke down, and this was the break of structure. Okay, this was the break of structure right there. Okay, so this is your sign that the trend has started. The break of market structure is a sign that the trend has started. Okay, so this particular one, this is supposed to be where my trade will form, where my next trade will form. All right, this is supposed to be where my next trade will form. But what we see happening here is that the price forms a very, very sharp move. I don't know what happened there because I was seriously selling. I was seriously selling this place. All right, I was seriously trying to sell this, and then this, I think I was even in profit sale, and then this sharp move just happened. I'm guessing, I don't know. I don't think it's a news event. I'm just guessing that this is a really sharp manipulation. It's obvious that it's a manipulation. So this one even went above this general area, okay, and then we continue selling. All right, so um basically, looking inside here, you can see that a failure swing happened, and we would still have been able to get on board with this sell trade if we look within and then find a trading opportunity in there. So that is basically an example of a failure swing in this case. All right. So if you are looking at any time frame, okay, whatever you are trying to trade, these are the two ways that the opportunity is going to form for you. These are the two ways that the opportunity is going to form, right? So um basically right now I'm looking for the
Sorry,
other.
CGI still inside that area where you said that's place where you had your POI, your initial POI, and then there was that sharp manipulation upward.
Yeah,
Can we still say that that is a stop run? Because there we had several lower highs. So I'm sure many traders would think the downtrend has started there, and then there was that sharp manipulation upward
yeah,
that
this
took out
is,
all
is
those lower
definitely
highs.
it's definitely a stop run. This
That's
like
the stop run.
this like trend line liquidity. That's what they call like trend line phantom. Okay, so everybody is safely selling this trend line and then it just wipes everybody out very quickly. So this is a run on liquidity. This kind of liquidity is called internal liquidity. So if you go to our course outline, there is internal, major, and external. So I'm hoping we can treat them this line, but it's looking uncertain because it's actually not possible. But yes, this is a run on liquidity. All these highs, they are liquidity, liquidity. So this one happened very fast. So you can be sure that there's a big agenda behind this. So yes, is these are stop run. This is a stop run right here. You can see that how do I even how do I phrase this thing? So basically, okay, this is an inducement. So I would look at this high, I will look at that high as a strong high. Let me try and where's that? So let me just say this high is a strong high over here. Okay, so once price goes ahead to run that area, okay, price goes ahead to run that area, okay. So once we break down below that general area that the major stop run happened, okay, so all these all these other ones, this one, let me try and mark them. This one, okay, this one, okay, all these lower ones, they're just internal liquidity. This is the major liquidity in this case, all right. So these guys are just small liquidity. They are not really strong. If I have a buy opportunity here, I will still take it because that is still the major high. So if all these guys get taken out, I will still be looking for an opportunity in there. But once this guy gets taken out, that is now the major stop run. All right. So you can now look within this area. Once price goes up, okay, finds a POI inside here. I don't know till now. I'm sure that this is the POI. Sha. This is where the POI formed or something like that. I'm not too sure. I'm checking it. It looks like primary inducement, Sha, but anyway, I've not come up with my answer yet. This thing really baffled me. Okay, so um, once this thing chops up like this, all right, that is a stop run. Let me say that, and that trader somewhere in the world was looking at maybe this zone. Okay, somewhere in the world, there's another trader that this is POI. Okay, so he's looking at all these things as a um, fake manipulation or engineering in the market. So people have said this was the stop run. This was the stop run when it went above this high here. Okay, and my chart is messy. I don't like my chart looking like this. Let me try and delete some of these things. Okay, so this was his stop run, and then this is the end of that manipulation. So that's the beginning to the end of the manipulation. Okay, manipulation, beginning to end of it. All right, so beginning to the end of it. So this is where price came into it. So we have a run on the stop above here, and now this is now the area of interest after price breaks down. Okay, after price breaks down, this is now the general area of interest. Price will not necessarily go above this place. Okay, so once price goes below it, so price ticks below it. Okay, ticks below it. Okay, still goes in to find a rejection block in here to continue the downward move. So I'm not saying you should just buy immediately you go back into the zone. No, that's not how you play it. You look for your POI, or you look for a place that makes sense to continue the trend from, but it should be within this area, because we are sure that this area is going to be a solid area that price will not go beyond it again. All right, so you look for your POI within it, and then you continue the sell. If this POI is smaller, you can put your stop loss above it, but in this case it's quite big. So what I will do is put my stop loss at this major high over here. I can put my stop loss there. So that's basically how it works. Some traders will just put their stop loss there. Yeah, people are like that. Okay, I also do that sometimes. So you can just put your stop loss there as well. Okay, so yeah, that's just failure swings and um stop run. I'm trying to find a very perfect example of a stop run. So, this is a stop run right here. So, a stop run is just basically like a reversal condition where the market reverses and you're sure that you have a change in trend. Okay, I was even here as well. Just looking at the chart reminds me of my trades, and it's very funny. So, we have this place now. We have a stop run down here. I'm not sure what is here because this was almost like a BTC, sorry, GBP all-time low. So if I draw a rectangle here, you can see that it's quite low on the monthly time frame. So BTC is at a price that has never even been to in a long time. Okay, so there will be some sort of support down there, but we are not sure what it is. Okay, what we're trading here is what we see within this 1 hour time frame. So we're just trying to go back to what happened there and frame it as, or understand it, not frame it. Understanding it as a, what they call it, stop run. Okay, so this was the stop run down here. All right, so this is, you can see how fake this is. This is just erratic. If you're buying this, you would feel somehow. So this is just like a fake hope. All right, so people might be buying this and it's just come down and take them out. All right, so once it takes them out, let's assume that you had a support down there. We don't know what the support is. Okay, the support is on a higher time frame, but I don't have time to go and be looking for that. So let's assume that the support is down there. All right, so price dips into my support. I can just buy immediately. Okay, I can just buy immediately right here, or I can wait. Okay, I can wait, and once it creates a break of market structure here, I'll wait for price to come back into a reasonable point of interest. Okay, wait for price to come down into a reasonable point of interest. So it comes down in here. Okay, I might say that there's still an imbalance there, so I will not buy there. Okay, so it still came down and used a sponsor candle, right? I can just say this is my POI down here. Okay, so my POI is within this general area. Okay, so within the general area is a good place to buy. So once you can find a good POI within there, you are safe to continue the move to the upside. Okay, so this is a stop run. All right, this is a stop run. So it comes down into this POI. So you can buy here and put your stop loss right below it. Okay, put your stop loss right below it. Okay, right below it, right there. So you buy it and you continue to the upside, going for primary inducements, going for primary inducements. All right, so that's basically how this trade panned out. So this is a stop run right here, and inside here we explained a failure swing. So that's just two of them on the chart. Tomorrow we're going to look at rules for it. Okay, tomorrow is Sunday. Oh damn! On Monday we're going to have a very long class. On Monday we're going to have uh, first of all we'll treat this true breaking market structure. I think I'll go quite fast. Okay, we have to meet up with what I want to do here. So we'll try and treat this two on Monday, and then we'll analyze some pairs for next week. So on Monday, I usually start trading from maybe Tuesday, Wednesday, Thursday. I don't put trade on Fridays. So after on Monday evening, that's when I usually look for things that may pan out that week. So I would like us to do an analysis together and then try and see if our trades will work out as we want. So I'll just be leading you guys through the process, how you should be thinking, what you should be looking for on Monday night. So we're going to have, I think, can we start earlier on Monday night or that is inconvenience?
Yeah, fixed anytime. Anytime. Okay.
Okay, I think I would put like 30 minutes or 1 hour earlier so that you can analyze the chart and still learn these things that you want to learn. Because if you don't learn these things now, you may not have a complete grasp of a trade or how you should plan your trade. So that's why I want to teach all those things before we continue. So anyway, guys, that is the end of this class. Uh, I want you guys to finish yesterday's assignment. Most of you have not submitted it because I said you should submit on Sunday. Most of you have not done anything. So um, yeah, complete yesterday's assignment and try and look over this video again and internalize the structure. Just draw the structure on your chart. You don't need to find it on the chart, okay? You don't need to find it on the chart. When you are trading, that's when you see it manifest. So you might find it on chart, that's your cup of tea, but I don't really think that that is necessary for this particular topic. Okay, so yeah, finish your assignment from yesterday and on Monday we'll continue. I'll let you guys know on Sunday whether we'll start by 7 o'clock or 8 p.m. Sorry, or 7:30 p.m. on Monday.
Sylvia,
Yeah.
please, I want to make a request.
Mm,
I don't know, like just for this class, though, like this kind of thing, you like the way you put these pictures of the non-stop and the failure swing
yeah.
in the note that you make up today. I don't know if you can send the PDF to like it makes sense the way you actually put the pictures there along with
Oh,
the explanation.
okay. I'll send it. Somebody has already made your request, sha, but I'll just do that, sha, but what I'll do is that I'll just put everything in a folder for you guys so that it's just be complete. You can even go through
Oh,
the previous ones, I
okay, thank
guess.
you.
Yeah, no wala. So yes, we have come to the end of today's session. If you have questions, please ask me, or if you have suggestions or anything, just talk before we close. Okay, no questions. All right. So yeah, thanks for making it today as well. I hope you guys have a restful night, and I will see you guys in the DMs with your assignments, and also on Monday night, which is when we'll have our